Good morning, America. Hubert Johnson here with Taxes Made Easy. So I want to thank everybody for watching the show, especially those that watch on rebroadcast. And I hope you all had a great weekend. I know I did. My San Francisco 49ers won the divisional round of football. But on a more important note, I hope everybody's getting ready to file their taxes coming up on April 15th. So if you're not ready to file April 15th, make sure you get your extension in by April 15th. Filing extensions after the deadline won't do you any good. So we're going to talk about what everybody asks about today, offer and compromise. A lot of people think, yeah, it's too good to be true. It sounds, too ridiculous, and sometimes it is. But sometimes it's just what it's promised. It's an amazing program for those that qualify. And I've used the analogy of Cinderella's slipper before. And we're gonna take a kind of deeper dive into what is the offer and compromise. And throughout this week, we'll talk about how do you qualify for an offer and compromise. And we're going to talk about different parts of the IRS analysis. So to get a little nerdy, where are all these rules about an offer and compromise? Where does it actually explain to you how the IRS looks at these? And now this is just all from the IRS perspective, but the rules and regulations are in the IRM. So the Internal Revenue Manual, which is their guide that they have to follow. They follow this plus any regulations and court cases that come down and changes in the tax laws passed by Congress. Now, how do you find the IRM? You go to irs.gov, and in the search bar, just type in IRM, and it will automatically come up. So again, it's one of the most searched terms. It comes up right away when you put in IRM at irs.gov. Make sure you're looking at irs.gov. That's where you want to be to go right to the source. Now, can you Google some of these terms from other companies? Yes, but they don't want to go into it too much because they don't want to give away their trade secrets and how to do this. We're fine giving that away because a little information, being informed, can be very helpful. But the smart people won't run with it and blow up their case. So I used to joke around. I coached baseball for Little League baseball for about 12 years. And I didn't know anything when I started. I stunk as a kid. I was horrible as a player because I needed glasses and I didn't realize it. But as a baseball coach and manager, I knew I didn't know that much. So I asked and I asked and I asked. And there were plenty of great people that were willing to help out and give me advice. And I learned a lot. And I was able to do decently. I had plenty of losing years, but I had plenty of winning years. I took a couple championships as well. So, I had a great 12-year run with my kids. When it comes to taxes, ask around, look around, read articles. But just because one person says something doesn't mean it's accurate. Call, get some free advice, and try to figure out as much as you can on your own. And where it gets too much, go to a professional, go to someone that knows, ask someone else who's a coach, who has experience, people that will help guide you through this process. And that's where good tax professionals come in. It can be very, very, very helpful. So you go to the IRM, and there are different parts. You want to go to part 5, called the collecting process. So these are kind of like chapters. And within part 5, you want to go down to 5.8. And it sounds all formal, but this is just how they cite things within the IRM. So if you find something like, well, hey, what about this? IRM at 5.8.1.32 says this. What does it mean? This is how you find out. So 5.8 is all about the offer and compromise. And so a lot of it's going to be, kind of ridiculous. What are they talking about? I don't understand it. But what you really want to hone in on, some people love reading regulations. They like, hammering nails into their feet or something like that. But they like the torture. It's 5.8.5, where it says financial analysis. That is the same financial analysis that they use for a non-collectible or hardship status. It's the same analysis that's used for an installment agreement. If you're not going to pay the whole amount, you're going to use your financial information. And it's the same analysis that we use on every single case, every single new client, where we're going to use financial information. And it really helps us know, what does somebody qualify for? Would an offer be better, or would an installment agreement be better? What do they qualify for? What can they do with the IRS? So we do the basic analysis. We kind of ask the right questions, and pretty quickly I get a good idea of what the case looks like. Now, once we do that, we'll offer suggestions and say, if you do A, B, and C, this might work. Or if it's too far of a stretch, it might not be the best thing for you. So while the offer and compromise program is an amazing program, don't get stuck on it. Don't think I have to have an offer and compromise. The reason I say that is because you might not qualify. You might even qualify, but it's not a good offer. I talked to someone the other day. They had too many assets. It would have been a $40,000 offer. It was like a $150,000 debt, but there was no way they could come up with $40,000 to do an offer and compromise. Is that a good resolution for them? Absolutely not. So we're going to do something else, buy them time where they don't have to pay the IRS. I think it was a hardship status. But go through, have an open mind, see what works for you. And in some cases, bankruptcy is the option. And if you're considering bankruptcy, talk to a local bankruptcy attorney. Just be aware of recent tax debt, especially if you're filing and you owe when you file older tax returns. That clock starts when you file, not with the tax year. So if you have newer tax debt that you just recently filed, bankruptcy might not be the best, or you might only be able to wipe out part of your tax debt. You can wipe out the federal and state taxes through a bankruptcy. For more details, talk to a local bankruptcy attorney. And I say local because it's different by every district. So the offer and compromise program has a few different names. The IRS or the government likes to slap a new name on it and say, hey, look at this wonderful thing we're doing for taxpayers. It's usually they just make a few little tweaks to it. Most administrations have made a few tweaks to it to make it a little bit easier in one way, or to address something to make it a little bit easier to do an offer and compromise. And that's been consistent, Democrat, Republican, pretty much across the board. Not to get political, but this current administration has gone the other way. And they have made the offer and compromise a lot harder for many people. One of the big things that happens is that they took away a rule that if you had equity in your home but couldn't access it. So if you're retired, you have a home that's paid for, but you're just eking by. You got enough, you're living, you're okay. But if you had to pay rent, you'd be in a world of hurt. So a lot of people will pay off their home and then retire and live on a modest income, but their home's paid for, so they're good, right? IRS will absolutely not give you an offer and compromise, whereas before those rule changes in the last few years, no problem. Another big issue facing taxpayers today, and this is across the board, not for an offer and compromise, but for an installment agreement or non-collectible status. And it's a numbers game, and it's politics. This is why. Inflation has been ignored. Real inflation is much higher than what the government has acknowledged. It just is. So here in my local area in Tucson, Arizona, the average person gets credit for between $1,500 and $2,000 a month for housing and utilities. That's rent, utilities, cell phone, cable, internet, any maintenance fees on the home. That it covers a lot. You can't even get into an apartment for $1,500. You can go get a room or something, but if you have a small family, have it own, being in your own place, your own home, or renting a home or an apartment, you're usually altogether paying $2,000 to $2,500, and often much higher than that, depending on where you live. So the allowables are very low across the country. There's, and Las Vegas has exploded. Rents have gone through the roof, like most of the country. It's very typical that people are paying $1,000 to $1,500, sometimes $2,000 more than what the IRS is allowing, because it hasn't. The official inflation numbers have not kept up at all with real inflation, and they just don't want to report what real inflation was, because if it was reported, it would be a lot more damaging than what it really is. So they exclude housing, they exclude a lot of the things that have exploded and are really affect taxpayers and regular families and homeowners, or renters especially. So if you've purchased a home recently or anything like that, it doesn't mean you can't qualify, but you're spending a lot more than they will allow for. Those are some of the biggest ways that they've just made it so much harder for people. So even if it makes sense and you should qualify, if you're spending $3,500 a month and the allowable is only $2,000, the IRS is going to say, "Oh, I see this as your rent. I see these are your actual expenses." But because this is what our government has determined, it's only going to be $2,000. Last year, we were hoping for a big increase based off of inflation. They actually reduced some numbers. It was unbelievable. Every May, so this May, those new numbers, every year they revisit the numbers. This May, they're supposed to revisit those numbers again. I do not have high hopes that this administration is going to change the numbers to reflect actual inflation and actual costs across the country. I hope they do. I really do hope they do. But that's a big way that people have been hurt all across the country, is not getting credit for their actual expenses. So when you do the offer and compromise, you have to get ready for it first. But before even going, I'm kind of getting ahead of myself. What is the offer and compromise? So it's been called the Fresh Start Initiative. It's been, it's been given quite a few different names, and marketing companies run with it. Have you gotten your Fresh Start Initiative? Is one of the major ones out there. Have you done? And it's the same old thing, just tweaked a little bit. And you still see plenty of ads. Hey, get your Fresh Start, the new Fresh Start Initiative. It's been around forever. 20 plus years it's been around, and it's just slowly changed with time. And to see if you qualify for it, you can go online. The IRS has a tool. It's not very good. You can call around and get opinions from people, but make sure they have a lot of experience. Make sure you're talking to the actual person, not just some salesperson. You should be able to actually talk to an enrolled agent or tax attorney that's actually handling offer and compromise cases and can give you a good idea of whether they're not going to qualify or not. There's plenty of firms out there that will tell people, look, you can do this. They pitch the offer and compromise all day long, because that's what people want to hear. If you get someone that's telling you what you want to hear instead of what you need to hear, get off the phone, run away. That's where you get a lot of people that they do a bait and switch. They sell you on one thing, and when they actually discuss your financial information, you don't get what you want, what you hired them for. So they get away with it by not telling you what you qualify for. And so when I talk to people and I go through the financial analysis, they're like, "Oh, well, that was very thorough." I was like, "Okay, well, the other people you talked to, did they do that?" "Oh, no. Most of the time, the answer is no. Sometimes it's yes. Okay, I went over that with somebody else, and I had a different take or whatever. But more often than not, people don't do it, and it's a disservice to you. So this financial analysis really does kind of lay out what you qualify for. And it is very important to do and to be thorough about. Now, I do it in 20, 30 minutes because I've done thousands of these. What is the offer in compromise? It really is an opportunity to settle with the IRS or with the state, depending if you're doing an offer in compromise with the state. It's based on it's a numbers game. So if you qualify, great. If you're close to qualifying, you can make some adjustments where you qualify, great. But if you don't qualify, you don't qualify. And there are definite reasons that do disqualify from you. And we're coming up against a commercial break. And so we're going to talk more about, dive into what is the offer in compromise, how does it work, and how can you make it work for you? So be right back, and we'll continue with the conversation. Welcome back, everybody. We're talking about what is an offer in compromise. So it really is the IRS's way of cleaning out bad debt. So if someone owes $100,000 or $1 million, then they're never going to be able to pay it. That's the IRS's opportunity to get something from someone that's never going to be able to pay. That's the general perspective from the IRS. That's why they have the program. And also Congress, they passed this. The IRS didn't just do this out of the kindness of the heart. Congress did it as a way to help taxpayers and to curry political favor, which is why over time Congress, through taxpayers complaining to them, overall have made the IRS kinder and gentler. That's been the general trend. The last few years, it's taken a big step backwards. But again, the idea is that they want to offer some kind of relief to taxpayers that qualify for this program. Now, they want to offer this program in an equal manner. So, under the law, they can't give someone a deal and then someone else a deal without having clear guidelines on how to do it. So, if they help out Jim down the street, but then around the corner, they tell John in the same situation, no, that opens the IRS up to lawsuits. And people sue the IRS all the time. So that's why each case really is fact, dependent on the facts of the case. But if Jim and John are in the same situation, they absolutely should get the same result. Now, as far as individual offer and compromise go, you got to do a couple things first before you submit an offer and compromise. You've got to get your taxes together. So you have to have everything filed. So filed, you have to have the last 6 years of returns filed, or proof that you need to be able to show that you didn't have a filing requirement. So for example, if you pull the IRS transcripts and it doesn't show sufficient income to file, all you have to do is have a short explanation and they'll leave that alone. You have to be payment compliant. And if I keep harping on those things, it's because it's absolutely necessary. When you file an offer, if you've owed for the past few years, even for 2023, you can file 2023. As soon as that's assessed, file an offer and compromise on it with the IRS. The states like to have the tax debt be 5 or more years old. They want it to be aged, and they want to have a chance to go after the taxpayer for a while. But with the IRS, you can file an offer on brand new debt. The key here, though, is they have to be able to see that you're not going to continue to owe. And you don't want to continue to owe, because the last thing the IRS wants to do is spend all this time on a case and then have you just owe again. So this is another change, not necessarily a bad change, but it forces taxpayers to be on top of payment compliance. So making sure you're going to owe or you're not going to owe moving forward for 24, 25, 26. So if you submit an offer and compromise and you're not having enough withholdings taken out of your paycheck, they're going to send you a letter within a month or so. It's pretty quick, saying you need to change your withholdings or we're going to reject your offer. Or if you're self-employed, they're going to say, look, you need to make this estimated tax payment. Estimated tax payment is something that you pay voluntarily throughout the year. It's not taken out of your check. So if you're 1099 or self-employed, you have to be making regular payments through the year to qualify for an offer and compromise. The IRS doesn't care if you pay it off at the end of the year every year. The law says you need to make estimated tax payments, so that's what they're going to stick to. And honestly, I think it helps out in more ways than one. When you do estimate tax payments, you're on top of it. It helps you stay out of trouble in the future. So again, if you don't have sufficient withholdings, if you don't have sufficient estimated tax payments, they're going to send you a letter saying, hey, you need to correct this. You have 10 days to do so. You need to provide proof of this right away, or we're going to just return your offer. And if they return your offer, that's it. You can straighten this out and then refile. But the IRS does not have a lot of patience for this. And to be honest, I think it's a good change because it helps people understand that they have to get the act together. They have to stay on top of this and make sure that they're not going to have problems moving forward. So what's the next thing to happen once you submit your offer? You're probably going to get a rejection letter. Every single offer lately, last few years, the first letter they get is a rejection offer. Used to be if you qualified, you can submit it. Someone would talk to it, look at it. We would follow up with them. But the first letter you might get would be an accepted offer. Almost never anymore. People can easily qualify. The first letter is, look, we need more information from you. You need to call us within 7 to 10 days or your offer is rejected. And that's in the fine print. They make these letters now look like your offer is being rejected, that it's done, it's over, go away. And this is when it's starting. This is when the whole process is just starting. You submit the offer, they get on board. When you get these letters, don't roll over. It's one of the reasons why so many offers get rejected is they don't know how to get in there and fight. So a lot of times you just need to call them and they say, oh, well, I had this in this question. And sometimes it's really basic, very simple. Sometimes if it's a very straightforward offer, they just need to confirm some details on it. What about this car? What about, this property you might have owned 10 years ago? But they send these rejection letters on every single case, whether or not they actually need information or not. They almost always ask for some kind of substantiation, something. And then you go back and forth a couple of times, make sure that the offer examiner has everything they need. And then you can that's when after that, a decision will be made. It gets a lot more involved in this, but I'm just doing a quick overview of the process. Now that you've gone back and forth with an offer examiner or offer specialist, as they're now starting to call themselves, once a decision is made, then they can come back with a counter offer, they can accept your original offer, but that's when you have to stay on top of not owing for the next 5 years. You have to pay your offer amount, usually within 5 months. If you do a deferred payment plan, which is 24 months, then you have to make those payments until it's done. If you miss a single payment on the deferred payment offer, the whole thing goes out the window, which is why I really don't like those kinds of offers, and I try not to file those. So it is a long, involved process, and I'm just trying to give you a quick overview. When people come and talk to me, I try to give them a frank assessment of how long their case is going to take. If you need to file older tax returns, it takes the IRS 5 to 6 months to process that. So if you go out and you hit it right away, you get your tax returns prepared, you can have your taxes submitted in about a month or so, depending on how available your tax preparer is. If you have a tax preparer that's just too busy to handle your case and they drag their feet for months and months and months, I've seen it happen for years. Get a second opinion, go to someone that can get them done and get them done quickly. Because when someone's dragging their feet, their feet for months and months and months, there's better help out there. And sometimes they're good, but they're just too busy. And you need to find someone that has more availability. So it can be 6 months just to get your tax returns filed. If you have all your tax returns filed, I estimate at least 7 to 8 months to go through the offer and compromise program. It is not quick. If you're expecting something to happen in a matter of weeks, an offer and compromise is not the way to move forward for you. So, and if there's appeals, if you decided to go to appeals and fight it, you don't agree, or your representative doesn't agree that your offer should be rejected, you do have the right to appeal and fight it, and that can add another 2-3 months to an offer. So it's not unheard of that it can take 8 to 10, 11 months, depending on an offer and compromise, depending on the complexity. I've had offers that we submit, and there's a business wrinkle to the case, or the IRS thinks there's a business wrinkle in the case. You get someone assigned 4 or 5 months into the offer, and they look at it and say, oh, there's a business aspect to it. I'm not certified to handle it. Boom, they send it to someone else. It's another 3 or 4 months before a business offer. Someone trained in handling business issues gets assigned to the case. So it's be patient. Be patient with the process. I've had plenty of people call me that submitted an offer with somebody else, and they said, oh, it's been 3 to 4 months and I haven't heard anything. I said, you haven't given it time. I'd love to bring you on as a client, but you'll just do the same thing to me. And this other company's already done all the work. See what's going to happen. Wait it out. Make sure they're communicating with the IRS. They should be having regular communications to keep a tab on what's going on. But you got to give it more time. So I'm going to go back to the beginning of the process a little bit. As you're preparing this file for an offer and compromise, you want to make sure you've done your due diligence. So you've got your tax returns filed, you are paying the IRS for the current tax year, and you're going to continue. You're all set up to continue making those payments. So they're not going to look at it. It's not going to be a question. You want to address as many issues heading into it as possible. You don't want issues popping up in the middle of an offer and compromise. It can happen. But talk to your tax professional. Don't surprise them. It just makes it so much harder. We've got another few minutes before our commercial break, but true story. I had a client who was an attorney, and attorneys make the worst clients. I frankly admit it. They unlike the baseball coach, me coaching baseball, where I knew I didn't know anything. Most attorneys think they know, or they can figure it out, even if they don't know. And they tend to create bigger messes by not going and getting expert advice or not listening to their attorney. They'll hire someone else, and they're like, I think they'll make decisions without talking to their attorney. So this poor gentleman, his wife was dying from cancer. Sad situation. They were going through a lot, and they had life insurance, well over $100,000, on his wife. A week before, in the week before she passed away, they quickly had her change the beneficiaries from him to all of his children. And so when she passed, this kind of was a surprise that she got sick and passed right away. And in this moment, he wasn't thinking about taxes. He was focusing on his wife and the situation, but it's kind of an afterthought. Hey, I don't want to be the beneficiary of all these life insurance proceeds. I'm in the middle of an offer and compromise. He made the switch and had all the money sent to his kids instead of him. Now, what did they use the money for? They paid off all the kids, all their travel expenses, all their hotel expenses to come and be there for the funeral. Now, if you get life insurance proceeds and you pay down medical debt, you can still deal with assets like that if you plan ahead. If you would have talked to me, I would have had a plan in place. Knowing what was coming, we would have been able to deal with it. We would have shared that with the IRS and say, hey, yes, they got this money, but it went to pay the doctors, medical expenses, etc. So he took the money, spent it in a way that was not allowable, And I didn't even know about it. I didn't even know this happened. So when the original offer and compromise offer examiner looked at it and they're like, he just got over $100,000, and he didn't use it to pay his taxes. He used it for other stuff. And so she rejected his offer, said, no way, no how am I going to accept this offer. I went to the manager, argued it out. But really, the best argument I had was a legal argument that it hadn't vested yet. Legally, until she passes away, she can change the beneficiary to whoever she wants. Problem is, if someone's dying, you have a capacity argument. You can say, look, she was on death's bed. Did she really have the capacity to make this change at the last minute? So again, last minute decisions are always a problem. I had to appeal it. And this whole process, you're not talking to other attorneys. You're talking to people that have experience just doing offer and compromises. So when I talked to the appeals officer, I was lucky. I got someone that had a lot of experience, that knew and talked to the tax attorneys within the IRS. And on this issue of had it vested yet, which is a legal term, he did not have the legal right to take the benefits until she passed away. So he didn't control who was the beneficiary. She did. And once she passed away, by sending the money to the kids instead of him, they actually qualified for the offer and compromise. It just made it a lot harder. I had to appeal it. I had to make legal arguments. It added months to the process. Instead of talking to me, we still saved the offer. Still got him an offer and compromise. Probably wouldn't get that done today for other reasons as well. But this is why it's so important to talk to your attorney, raise up the issues. Hey, I have this money here or whatever, and either save you the time and money in doing an offer and compromise, or we address it and deal with it. So when they do look at it, you can make sure your offer is still taken care of. Hard commercial break coming up, and we'll be back shortly to continue the conversation. Welcome back, everybody. We're talking about offers and compromise and how to do this right. So this is kind of just an introductory thing where we talk about things to be careful about. Ended up talking about how one of the worst things you can do is hide things from your attorney. Don't give him the full picture, or your tax attorney or a tax professional. The IRS usually has more information than they do. Now, there are plenty of things that people forget or they don't really remember, and the IRS will pull real estate records on an offer and compromise. They will pull vehicle records if you sold a vehicle, if you gave it away, etc. So I frequently get the question, I have this extra car. Can I just give it to my kid or something like that? I'm like, you need a fair market transaction. If you draw up an exchange of sale and he's making regular payments to you for the vehicle, that's fine. But then those regular payments need to be reflected as income. So it can be done, but you want to be above board. You don't want to hide anything. So anything that the IRS sees as you're moving assets out of your name just to keep them from the IRS is a huge red flag for them. Trust me, every gimmick, everything you're going to try to pull, the IRS has seen it hundreds of thousands of times. So there are ways to do it legally. I have a case right now where they had a property in the parents' name and it had equity. They sold it to their kids. I told them, look, do this. If you're going to do this, you have to go to a mortgage broker. You have to sell the property, and the proceeds need to flow through to the parents. And they were asset rich, but income poor. So it actually worked out for them. But again, we have to do a legitimate sale. And I recommend you don't do it just between family members. You go to a third party, like with real property. You have a mortgage broker do it. They applied for a loan. They did everything above board. So tell your tax professional every relevant fact. If you have assets that you don't think they're going to see, they're going to know it. Anything over $10,000, the IRS sees, and a lot of interest is reported to them. I had a case right now where wasn't my case, but one of my associates, they had an old retirement through Disneyland, and the company that was handling it, they worked and retired at working with for the Disney Corporation. The retirement company was some name they didn't even recognize. But when they took the money out, they paid down a lot of necessary expenses. And so we just had to show the IRS what happened with that money. Well, they lived off of it for a while. So that's why it's very important that you're very upfront, you produce all the information. And again, there's plenty of times where the IRS finds stuff. The more remote it is in your mind and you just can't think of it, the more likely it's not very relevant to the case. So they're only going to go back a few years. They're not going to go back 8 to 9 years unless you won the lottery and took $1 million and blew it after you, when you should have, when you already owed tax debt. So there are 2 major forms that need to be completed for any offer. And the best way to find those forms is to look up go on irs.gov and type in 656 booklet. So the 656 booklet has the form 656. So this actually has the details of what you want to offer the IRS. Now remember, you can't offer $0. It has to be something. It can be as low as $1, but it just has to be something. And they don't do cents. So if you offer $1, I usually go $20. Who can't come up with $20? And then there's a filing fee that goes with it. The other form is the 433A in parentheses OIC. And that will be a part of that booklet, the 656 booklet. So it gives you the 2 forms. And at the bottom, it even tells you where to submit the forms, where to mail it. Now you have to have original signatures on these. You can't fax them in. When you actually submit them to the IRS, they have to have those original signatures. So you want to send it certified, especially if you're submitting payment. Any kind of payment, I highly recommend be personal checks. Why? Because the IRS loses stuff all the time, even with the offer and compromise program. So if you have a tracking and they received it, and there's times where they cash the checks and then lose the paperwork. But if they do that, always keep a copy of everything. Your tax professional, or you can fax in a copy of it, but you have to be on top of them and say, hey, you cashed my checks. Where's my offer? And they're like, oh, we don't see your offer. Where is it? And it's like, you knuckleheads lost it. You don't say that. That's what you're thinking. So when you get these forms together, you submit them together with the payment, with any substantiation that needs to be submitted. So usually it's the last couple months of pay stubs and the last 3 months of bank statements. And this is where the IRS catches most people. It's the last 3 months of bank statements, all pages. So you can't do a little computer printout. You have to print it out as if like you used to get in the mail, back in the days. I'm kind of dating myself. So they still have statements, and you can go online and pull up your January statement, your February statement. They usually go from like the 15th to the 15th of the month, or maybe the 9th to the 10th, or the 10th to the 9th of every month. So it usually covers a couple months. So what happens if you do have a lot of money flowing through your bank accounts? You can clean things up by changing your activities and producing clean bank statements after 3 months. You decide when. You can file an offer and compromise without substantiation. They will ask for it. If it's long enough, if you submit substantiation, they might ask for it again, which is kind of frustrating. But case in point, I had a husband and wife, and they were transferring money back and forth all the time. It was the same money. But because they would, each person kind of had their own bills that they would pay, so they would transfer money to each other. It's just how they made things work in their own way. But all these transfers were hard for the IRS to track. Taking large deposits out of your account, cash deposits, it's hard for the IRS to track and see what's going on. So like, okay, where's this money going? What's going on here? Large deposits, hard to track unless you can show where it's coming from. Mixing business and personal expenses is another big red flag on bank statements. If you have a business, you really should have a separate business account, even if it's a side gig, where all of your income from that side gig goes into that account. You pay all of your business expenses out of that account. And whatever you take from that just gets transferred from the business account to your personal account. That way the IRS can easily see, okay, this is what they actually took from the business, goes to the personal account, and it should match what's on your profit and loss or what's on your tax return. So make things easy for the IRS to see. If they're complicated, try to simplify them, try to make it easy for someone to track. And again, submitting clean bank statements is very, very important. And you can prepare. You can wait until all the mess, or your grandma gave you a gift of $10,000. Wait 3 months so it's not on your bank statements, and then submit your bank statements. So being a little strategic with what's on your tax, with what's on your bank statements, and it's still accurate. But when you submit the offer, you need to continue those good habits and having clean statements, because they can ask for the last 3 months again. So if you submit those bank statements with your return, that's fine. And I've had time where we had someone start cleaning up their bank statements, and we submitted the offer saying, hey, you're not going to do this anymore, right? And they're like, yeah, we won't do that anymore. And then the moment they submit the offer, they go back to their old ways, and then it becomes a problem. We're like, look, here we told you we needed clean bank statements. Now we need them because it's been 5-6 months now. They picked up your offer, and they submitted bank statements with the same problem. I'm like, look, we talked about this. You said you weren't going to do this. Oh, I didn't think it. Yeah. Listen to your tax professionals, and they should be giving you advice throughout the whole process. If you have questions and they're not answering your questions, or they're not helping guide you through this process, talk to someone else, get a second opinion. You're probably not getting the help that you need unless it's a very simple case, but you should always be able to talk to your legal team and get some guidance as to what's going on and how best to take care of your case. Now, you get this packet together, 656 and a 433A OIC. So they have that's just their financial form. Filling out these forms is a lot harder than you might think. And there's a lot of information that people put on there that can really hurt their case. And especially the 656 needs to be completed a certain way. So if you don't know how to fill out the form correctly, get some help, get some expert advice. Most people don't know how to fill out the form correctly. So again, it's very different than a normal financial analysis, because you have to look at the IRS numbers. You have to look at, and I directed everybody to the IRM, Part 5, the collection process, subsection 8, offer and compromise. And then within that, section 5, or section 8, and then subsection 5, which is the financial analysis. So this next week, we're going to talk about different parts of the financial analysis, vehicles, assets. So there's really, you have assets, and then you have future income. And these are technical terms that the IRS uses. They don't sound that technical, but how they determine what is an asset and how much they're going to apply can make or break your offer. And one of the key things here on future income, make sure you have someone that knows what they're talking about, because they don't look at future income or what you have available for the next couple months. They look at it for the next 10 years, up to 10 years, or until the tax debt expires. So it's a much more complex analysis than you would think. And I've had plenty of times where I've looked at a case, I said, look, it looks like you qualify now, but this is what the IRS is going to do. They're going to say in 6-7 years, you're going to pay off some debt, and then all of a sudden you have all this money to pay them, and they're going to reject your offer based on that. So be very careful as you go through this process, get good advice, and it's always important to know what your options are going into this process. again, it's like Cinderella's slipper. If it works for you, if the shoe fits, it's amazing. It's great. We get offers accepted all the time. We settle tax debt for as low as $20 if you qualify. If you qualify is the key thing. So tomorrow, we're going to talk more about the offer and compromise, but we're going to kind of dive into the financial analysis. So get into the weeds, and we're going to try to make it simple. So, the first big thing that we talk about is real estate. Real estate and the IRS. How does this affect it? And so understanding how the 433A works, how the IRS looks at the different assets and income, you can use that to your advantage. You can plan ahead of time. There's been plenty of times where I've helped someone sell property so that they could then qualify for an offer and compromise. And again, one property, they were paying property taxes. They couldn't afford it. Before they lost it, they sold it, and the proceeds went to the IRS. But it was only around $7,000-8,000 because it was just an empty parcel. Had one building that was rat infested. I mean, just not a nice property. And then we got that off of her back, so she didn't have to continue to pay property taxes for retiree. And then we were able to do the offer and compromise with the rest of the assets, and it was successful. So getting prepared for an offer and compromise if you qualify is absolutely key. And I give the same advice if we're doing something else like an installment agreement or a hardship status. You can definitely prepare for those situations to qualify. Make sure you get what you want to get, if it's reasonable, and we can make it fit. So you can shove that shoe in a little bit, but if you start slicing off a heel or cutting off a toe to make that Cinderella slipper fit, it's not the best fit. You don't want to shoehorn things in too hard, because then the IRS will probably reject it if you're going outside the rules, or if it just doesn't pass the smell test. So Hubert Johnson for Guardian Tax Law here. We are running out of time, but tomorrow we get to talk about real estate and how that affects not only offer and compromises, but other cases as well. So, a lot of people have real estate. We'll talk about the types of real estate and just kind of do a deep dive into how real estate can affect your taxes. Again, if you have any questions, say, look, I just need some more information. You can reach out to us. Our phone number is 520-485-7371. Our website is guardiantaxlaw.com. And again, we do a free consultation to put your mind at ease and help steer you in the right direction, because again, it shouldn't cost you an arm and a leg to figure out just what your rights are. And you do have rights and options with the IRS. So we're going to wrap it up there. We're heading to another commercial break. And I want to thank everybody again for watching live, and those that are watching on rebroadcast. Have a great day, and we'll continue the talk tomorrow.